Namaskar, this is Akhilesh Bhargava. Welcome to Tit-Bits on Business and Finance with me. It was sometime in April 2019 that a merger was proposed between the Laxmi Vilas Bank and the India Bulls Housing Finance Company, a part of the India Bulls stable. If this proposal of merger had been approved, then the shareholders of India Bulls Housing Finance, led by Gagan, Banga and Samir Gehlaut, would have owned over 90% of the new merged Laxmi Vilas Bank. That would have meant that India Bulls Housing Finance, which is at the moment an NBFC, would have been converted into a bank, and that would have given a backdoor entry to the India Bulls group into the business of banking, something which the Reserve Bank always prohibits. But on the surface of it, this proposal did make sense. Laxmi Vilas Bank faces an extremely weak financial position with its capital and finances eroded because of huge NPA losses. On the other hand, India Bulls Housing Finance sits on a huge fund base of about 25,000 crores, and that fund would have got infused into the merged entity, thus strengthening the bank, making it a strong and stable entity, and of course, giving the India Bulls Group an entry into the business of banking and enabling it to deploy its huge funds, idle funds for that matter, into a more profitable manner. But then, what made sense on the surface did not seem to make sense to the markets, and the share prices of these two entities have actually fallen by over 70% between April to now. The markets just did not approve of this proposal. In the initial days, it was thought that the Reserve Bank was not completely against approving this proposal. The Reserve Bank, of course, has its own reservations and conditions to put, but then the group, India Bulls Group, was thought to accept every condition that the Reserve Bank would have put. And the primary reservations that Reserve Bank had were to do with the appointment of Samir Gehlaut and Gagan Banga on the board of the new bank. It is said they had agreed that they would not be appointed on the board of the new bank. The second was that the Reserve Bank would not permit these two gentlemen having shareholding exceeding 10% in the new merged Laxmi Vilas Bank. It is said that they were agreeable to that also. Reserve Bank had some other reservations also, and they had to do with the links of India Bulls Housing Finance Company to the real estate sector, something which has disturbed the finances of many an NBFC and banks. But despite these reservations, it was initially thought that the Reserve Bank would give its approval for this merger of India Bulls Housing Finance Company into Laxmi Vilas Bank, and thus give the India Bulls Group an entry into the business of banking in India. But then as time passed by, things seemed to deteriorate for both these entities. Laxmi Vilas Bank was put under the prompt corrective action management by the Reserve Bank of India because of its pathetic financial position and huge NPA losses. By virtue of getting under the PCA management of the RBI, the board of directors of Laxmi Vilas Bank could now no longer take any material decisions. It could not declare dividend, it could not give fresh loans as it would have wanted to, and Laxmi Vilas Bank could also not open any more new branches, something which was very imminent if a larger bank was created by the merger of these two entities. On the other hand, the credit rating of India Bulls Housing Finance underwent a downgrade. CARE downgraded its rating from AAA to AA+, and Moody's downgraded its outlook to the company to negative, yet another downgrading of its credit rating. And then came a final nail in the coffin according to us, because of which this proposal would have got torpedoed by the Reserve Bank of India. A whistleblower petition by way of a PIL was filed in the Delhi High Court by the Citizens Whistleblowers Forum in Delhi. This petition alleged very large-scale instances of money laundering, hawala, tax evasion and round-tripping by the India Bulls Housing Finance Company, which they said were to the tune of over 25,000 crores and which must be investigated by the Enforcement Directorate and by the Income Tax Department. It was thought initially that this is a frivolous PIL, which it very often is, but soon the Delhi High Court took a very serious view of the petition. Income Tax Department and the ED has been directed by the Delhi High Court to conduct an investigation into the affairs of Indiabulls Housing Finance, and we think that that was the dampener in the entire matter. The news now comes that Reserve Bank of India has not accepted this merger proposal. It has actually rejected it by virtue of its letter dated 9th October. Of course, the exact reasons why the Reserve Bank of India rejected this merger proposal are not in the open. They are not in public domain. But we think that the reasons are now very apparent. We think that the Reserve Bank would have not found Indiabulls and its promoters to be a worthy partner for the Laxmi Vilas Bank and to be not fit and proper persons to be on the board of directors of a bank. Thus, not only was the Indiabulls Housing Finance Company, according to us, not found to be fit to be transformed into a bank, but even its promoters have not found to be fit and proper to be on the board of directors of a bank. Further, Reserve Bank of India very clearly has got reservations about the state of affairs of Indiabulls Housing Finance Company, which are now under investigation by the ED and the Income Tax Department, and perhaps it would be waiting for the outcome of that to really see what is the pedigree of the balance sheet and financial statements of the Indiabulls Housing Finance Company. Maybe what also weighed on the minds of the Reserve Bank when it rejected this proposal was instances of mismanagement of private banks, like we have seen in the case of Yes Bank, where Rana Kapoor has been finally eased out of the bank. Maybe these were the reasons, but then these are just guesstimates that we are doing. We don't know the actual reasons. We still think that the Reserve Bank needs to make public the reasons why it has not permitted this particular proposal. Because on the surface of it, as we said, it made a lot of sense. One did not have the capital and the other had it. The other needed to expand its business and the first one gave it a chance to expand its business if that capital had been deployed. Now that the Reserve Bank has rejected this proposal after a 6-month wait, there is, as Gagan Banga says, certainty for Indiabulls Group and Indiabulls Housing Finance. Indiabulls Housing Finance had actually stopped conducting the business of lending, awaiting this approval, and now this uncertainty ends for it. But the biggest question that remains to be answered is, what is Indiabulls Housing Finance going to do with this huge bank balance that it sits on, about 25,000 crores? Experts say that it is going to announce a buyback of shares. We really do not know. So while Indiabulls Housing Finance has a problem of plenty, on the other hand, Laxmi Vilas Bank continues to seek an investor as it desperately needs capital to revive its operations and come out of the prompt corrective action of the Reserve Bank of India. This is Akhilesh Bhargava signing off till we meet again. Namaskar.